Hey guys, welcome back to the channel McNallie Money, the new home of power mining analysis. In today's episode, Anthony Power and I have a packed agenda for you. We just got July production results out from Bitfarms, Hive, and CleanSpark, so a lot of numbers to go through in today's presentation. In addition to that, Marathon just came out with their quarterly earnings, and we wanted to touch on Riot as well. So a lot to go through, a lot to discuss. Before we do though, you guys, please take a second, smash the like button. It's a big help to myself and the channel. If you're not already subscribed, McNallie Money, feel free to join and let us know in the comment section below what you thought about July results, the earnings we've seen so far in Q2, and your outlook for the back half of this year. Now with that being said, let's get into today's video. Okay guys, so that's right. We got Anthony positioned nicely in the camera lens here. We can see the power mining shirt, Anthony. It's looking great. We've got a ton of news hot off the press today. We've got July production results from Bitfarms, Hive, and of course CleanSpark. In addition to that, Marathon came out with earnings, and we wanted to do a quick little follow-up on the Riot earnings video from last night as well. Obviously interviewing Jason Les. Very exciting time for the company and the industry. But before that, Anthony, I looked at the trading account this morning. It's not looking good, buddy. We've been on a red slide here really since, I guess, before our trip last week. How are you feeling in the stock market right now? Is the confidence in the miners wavering at all? We were anticipating a red Q2, and it looks like that's exactly what we've gotten here.
I wasn't anticipating. I mean, we just know that there's always a bit of volatility in mining stocks. The Bitcoin price has been a bit volatile last few days as well, heading down to 63, back up to 65. But the mining stocks seem to be having another red day, but we know that the turnaround can happen. And the fact that we had Freedom by 40 on the channel this week gave us an indication of where he sees things, and he's pretty much on the nail with most of his predictions. So I've been in this space now for 4 years, so I'm not going to get shocked on a couple of red days. Fortunately, the last month or so, I managed to take a few bits of profit off the table anyway, so that put me in a reasonable position. And this year, I've done really well compared to previous years. So I'm still fine where we are at the moment.
Yeah, the volatility definitely goes with the industry. You're right. Bitcoin has been all over the map since former President Trump's speech, his platform, the strategic reserve. There was a lot of optimism. Bitcoin's pulled back in a big way since that event. But as you say, Anthony, this stuff takes time. And in general, if you zoom out, you guys, when in doubt, zoom out. We're moving up and to the right, which is a great sign. So let's get into some of the details here, Anthony. I know you've put together tables for each one of these miners. Now, I was checking Yahoo Finance yesterday. Obviously, I wasn't able to see any of the news come out, but a number of these companies have already put out their July production results. We're actually working on incorporating this news directly into the Power Mining Analysis website, which will be great. But you've actually gone out, you've consolidated these press releases, Anthony. You put them into nice little tables. So we'll start off with Bitfarms. Fairly strong month. They fell a little bit short of their 12 exahash operational goal. We're going to talk to that in a second here. Sounds like some faulty T21s on site. We also got a great image of their new facility being built. So I'll hand it over to you, Anthony. What was your feeling on Bitfarms for the month of July?
Yeah, Bitfarms, we know we get a reliable update month by month, very consistent. So we knew at the end of June, they managed to get fairly close to their target. I think they plugged in something like 11.4 exahash. Not all of them was powered up in June. And we've seen now with the update for July, that they're operating a total operation hash rate of just over 11.1, with an average for the month of just over 10.3. And part of the reason for that is 700 petahash or 3,000 T21 miners have been found to be, not operating at all as they should be, even in the cooler climate. So we know there's been some issues with some miners in hot conditions, but these miners are in cooler conditions. So those machines are being replaced by Bitmain at Bitmain's cost. And so hopefully they'll be replaced quickly, which will get Bitfarms back to where they need to be, which is 12 exahash by mid-year, on their way to 21 by the end of the year. So in terms of power, and we start to include power now because it's a really important metric. Bitfarms currently operating 310 megawatts. Another good thing that Bitfarms have done, if you go back a year ago, Bitfarms were probably had the most, even though they were producing some of the best monthly results, had probably the most inefficient fleet of all the mining companies that we cover in the analysis. I believe a year ago it was something like 38 joules a terahash, which is at the sort of like literally slightly above the average. So you've got some of these miners who are operating under 30 that period, but they've brought it down now to 25 joules. So a massive pat on the back to Bitfarms for getting that down to a really good level, because we know once you get your efficiency down into them sort of 24, 25, and we'll come on to CleanSpark in a second, you're paying less energy costs to mine Bitcoin, because it's, there's two elements to this. There's the price of power, and then the efficiency of your mining machines that you're utilizing. And if you've got more efficient miners, it means they can do more for actually with less power. So you're saving cost in mining Bitcoin. So operating at 25 joules a terahash means their cost of power is significantly down on where it was 12 months ago in terms of that particular metric. In terms of HODL, they're now holding over 1,016 Bitcoin, which is that's got over 1,000 there. So that they constantly adding to the HODL each month. They sold 142, so it looks like they've added 111 Bitcoin to their HODL, which is great. And that has a value based on the Bitcoin price closing at the end of July of 65.5 million. So plenty of plenty of treasury there in terms of Bitcoin HODL. We also know that they've got a reasonably good cash balance as well.
Yeah, the other thing I'll throw in there, Anthony, they did give an update on the synthetic HODL as well. So it's great to see some insight. Jeff Lucas was actually on my panel in Nashville talking about Bitcoin balance sheet, treasury management, a lot of interest around that synthetic HODL. They've actually set up their own trading desk. I think this really is pioneering a new avenue for balance sheet protection and stability for these miners. So really interesting there. I also wanted to say, Anthony, they gave a great image of their Paraguay facility going up. Really interesting to see how red the dirt is down in South America. I suppose doesn't look anything like where I'm from, but great to see that going up. Looks like a top of the line design and structure, and excited to see that continuing to come online here. It really feels like Q2, as you mentioned, Anthony, is kind of a low point for the industry. There was a lot of headwinds facing the miners in terms of Bitcoin price, having difficulty. Kind of everything was against us in Q2 here, and it feels like a lot of these companies now, it just should be every month is getting greener and greener in terms of cash flow, in terms of operating hash rate, and overall hash rate for these organizations. So I'll hand it back to you there, but some great updates from Bitfarms. Really like to see the images and the synthetic HODL details as well.
Yeah, I mean it's certainly a good update. And in terms of cash, they didn't put the update in the July, but if you go back to the June update, they had about nearly 140 million in cash on the balance sheet as at the 30th of June. So I mean, but based on what they've done in July, I would imagine there'll be most of that still probably intact there. So they've got a really good treasury position heading towards 200 million, which is in the time post the halving. That's what you want to have, a strong balance sheet. Their earnings will come out next week, and we'll have Ben on the podcast to go through that, and we'll get more of an update on how things are moving in terms of hash rate increase now, because we're sort of less than 5 months away from the end of the year, and we need to get that hash rate up from 11.1 to 21. So effectively another 10 exahash to come through. So nearly doubling where they are at the moment. But Ben was quite clear on the previous podcast that, that target is well in place to achieve it from an energized position. So we're also asking CEOs when they get their targets, and we did the same yesterday with Jason, is to say, when you put a target out there, we're expecting that to be energized hash rate, not just machines that have been delivered or machines that are in storage. We need to understand if it's operating hash rate at that given point in time. And so far, the ones we've spoken to have said yes, and Ben agreed that 21 will be operating by the end of the year. So we'll get another update next week from Ben on that particular issue. But yeah, a good update. And in terms of we use the metric Bitcoin mined per exahash, 24.6 was the amount they were able to mine now. Bear in mind, the difficulty for mining went up to 10% the other day, just over 10%, which was one of the largest increases in recent periods. That's a significant amount. And what that means is there's a lot more over that period, that the previous 2 weeks, there's a lot more hash rate on the global network, and meaning that the time to mine a block was significantly less than 10 minutes, probably lower than 9 minutes. And so the difficulty increases to make it more challenging for miners to find the number, and therefore to try and get that block speed back closer to 10. So that was a number that was significantly high. We haven't seen anything like double-digit increases for some considerable time. And effectively, that means that 10% means that these companies will be mining less than 10% of their production in the month of August than they were in the month of July. And we've already seen that now with the Core Scientific actually issued their daily production update. And when we were at Nashville last week, and they were putting out their regular updates, circa about 12 to 13. Yeah. Their latest update is now just above 10. So you can see straight away there's a chunk of Bitcoin reduction there for that company. And Core Scientific are a consistent miner, so there won't be a reason other than the actual difficulty itself. So yeah, point worth noting for some of these miners.
You're right there, Anthony. Core Scientific is a great gauge because they give out those daily updates. It's easy to see kind of the fluctuation, but you got to think there's a lot of anticipation, a lot of people plugging in machines that maybe aren't profitable at today's hash price, but must be anticipating that big move in Bitcoin, hey, as we continue to see the global hash rate increase and increase.
And I just want to, if I just emphasize, so if we go back to 1 year ago in terms of Bitfarms, when they only had, at that point in time, they were operating at 5 exahash. So today they're operating twice that amount. So with 5 exahash 1 year ago, they were achieving 378 Bitcoin. And with double the hash rate, they are achieving 253. That's the scale of the change. So really, they should have been, if all things being equal, using the same difficulty as last July, with the hash rate today, they would have been heading towards close to 800 Bitcoin, and they've mined less than a third of that. That's the impact of the difficulty. Now, yes, the price of Bitcoin has changed since July 2023, but believe you me, as it changed by that amount of margin. So, we'd be interested to see the correlation in Bitcoin price and difficulty price, just to sort of to give people an understanding of that. So maybe we can do some sort of graph and cover that in a future podcast. But that's an interesting point to make in terms of these miners. Every month, their Bitcoin per exahash has just been dropping and dropping and dropping.
We call that tough sledding here in Canada, Anthony. Tough sledding for the Bitcoin miners. Hey, now you mentioned we have Bitfarms CEO Ben on next week to talk about earnings. That's going to be on Friday. So I'll throw up a quick visual or calendar here on the screen. So we've got Bitfarms on the 9th, which is Friday. We've got Bitdeer scheduled on the 13th, which is Tuesday. Wednesday, we've got Wolf. Okay, so that's going to be the 14th. Thursday, we've got Hut 8. It sounds like we might also get Bit Digital in that same general window there, the 15th or 16th. We've got Soluna on the 16th scheduled in. Cipher actually going to be making their debut on the channel. We've got Tyler Page coming on Tuesday, August 20th. Then we've got Dennis Porter on the 27th. So the founder of Satoshi Action Fund, a huge name in the industry, someone we were able to meet and interact with at the event in Nashville. Then we've got SATO Technologies on the 29th and DMG on September 3rd, Anthony. So really filling up the roster here. Now, one thing I'll mention to you guys, we organize these interviews, we get the CEOs on, but the questions we ask come from the audience. So if you guys have specific questions, last night, obviously, we interviewed Jason. We saw a ton of comments about stock compensation. Send us those questions in advance, you guys. We're happy to ask any questions. Obviously, we're going to spin them in a respectful way. We're not going to say whatever comes across our Twitter feed, but we will compile those. We'll put them into the interview. We can get you answers. So pretty much every single miner, aside from Riot, is remaining to be interviewed this month. So please do get those in. Make sure you mark these interviews down, and we'd love to have you guys as part of the commentary on there. Now, moving along, Anthony, we've got Hive. They came in just north, I think 116 Bitcoin mined for the month. So give us an update on Hive. We just talked to Frank and Aiden. We saw them down in Nashville. They're feeling really good about where this company is going, the strategy, the future. How do you feel currently about Hive?
Yeah, I mean, you know, we've just talked about Bitfarms, and now Hive's the next miner to talk about. Again, we're talking about the two most consistent miners for the last 3 to 4 years in terms of production. So it's no shock to know that these two will set the standard for July in terms of operational production. And this is just one metric. It's not talking about how profitable they are or anything else. This is really about how, you know, on an equal level playing field with machines plugged in, how much Bitcoin they're getting compared to their peers. So the Bitcoin mine per exahash is a really good indicator because it will show you how to compare every miner. But it's just one metric, so please don't go away thinking, you know, I should be spending all my money on Hive and Bitfarms. There are probably 20 more metrics that you need to do or look at, and therefore you can have a balanced view before you ever consider buying any of the mining stocks that we talk about. But their update for July, mined 116, so total operational hash rate at 4.9 exahash. They had an average for the month of 4.7. So they have been hovering around this hash rate close to 5. They have 142 megawatts of power. So effectively, look at Hive, it's literally about half the size of Bitfarms in terms of mining. And from an efficiency point of view, 26.7 joules a terahash. So machines are slightly more or slightly less efficient than the fleet that Bitfarms have at the moment. But we know that Bitfarms have gone out and purchased a lot of T and S21s to really upgrade their fleet. Their fleet was, like say, 38 last July, 35 earlier this year, and has really started to sort of come down. But
And
Hive,
just a
I mean,
comment
even at
there,
26,
Anthony. It's interesting that T21 is underperforming or giving Ben some problems, because I remember him praising the T21 for actually overperforming when they were doing their testing. So I thought that was interesting, and I'm glad you called that one out.
yeah. And so, you know, that Hive are due to get, you know, they've ordered more S21s. And what Hive have been doing this year, rather than increasing the size of their fleet, they've been replacing miners in their fleet. So, you know, end of the day, these mining companies who purchased like the S19s back in 2021, 2022, these machines are probably now about the time they're replacing. Those early S19s have an efficiency of about 30 joules a terahash. And if you look at, you know, the efficiency and then look at the cost of power with the Bitcoin price at the moment, you're probably not going to be able to, you know, make any significant margin using those machines. Hence why some of these big companies now are going out and going for S21s, T21s, S21 Pros, the equivalent machines in MicroBT and Canaan. And then we've also got these other providers coming out there like Bitdeer, Block, Auradine, who are bringing out, trying to bring out even more efficient machines than are on the market at the moment. So there's a lot of competition out there, and these miners need to do that. The good thing about putting some of these more efficient machines in is that you don't necessarily have to build out new locations to grow your hash rate. So if you had the original S19s, which were operating at 30 joules a terahash, and you take that out the building and replace it with an S21 Pro, which is operating at just under 15, it means that you're going to get twice the power for the same space. And therefore, you could actually, if you had a building that was operating at a certain hash rate, say 2 or 3 hash rate, and replaced it with mining machines that were twice as efficient, you could then effectively have double the amount of hash rate using the same size facility. So it's a real benefit to miners, because these facilities, we don't talk enough about them, but they're not cheap to build. And we need to understand that these mining machines don't have a long life. 3 to 4 years is probably the maximum you're going to get out of machines, because the level of efficiency changes, and it's changing rapidly. As soon as the S21 came out, they brought a Pro machine out, which was even more efficient. And then we've had updates from other mining companies saying, well, we can do that as well, and maybe even get more efficient. And, Bitdeer's Seal miner, they are fully expecting to get to 10 joules a terahash with a sort of like real goal of 5, which at the moment's an optimistic target. That it's something that they put out there to aim for, but they're confident that they can reach. They're at 18 at the moment. They can reach 14 in the next month or so, down to 10 by the end of the year, and then they have an aspirational goal of getting down to 5, which is beyond me at the moment. So out there. But going back to Hive. Hive, in terms of Bitcoin mined per exahash, they're actually slightly better than Bitfarms this month. So it'd be interesting to see year to date. They're so close in the table, we might actually see Hive overtake Bitfarms in the month of July. And bear in mind, those two companies have been 1 and 2 for the last 4 years. So it's no shock. Bitfarms have held top position for the first 6 months of the year. Hive this last few months have started to eke out a little bit more efficiency, and this number might bring them either really close or might even take them over. There's very little between them, but it looks like that. From a hodl position, Hive have been really hodling the last sort of 12 months, and you can see they're hodling now at 2,533. So they sold 79 Bitcoin, but they added 37 Bitcoin to their hodl. That's got a value, as at the end of July, of just under $164 million. So again, you've got a mining company here with a great treasury. We know that they've just signed an agreement now to go and build a 100 megawatt facility in Paraguay, quite close to where the Bitfarms facility is. So, and they've given themselves a target of getting that building up and occupied by July next year, which will take their hash rate to around about 12.1 exahash. So we'll be monitoring that as we go through. But again, like Bitfarms, a good standard update from Hive.
Yeah, real smooth operator for both of these companies. Now, you mentioned that Bitfarms is essentially double the size of Hive. If you double the size of Bitfarms, you pretty much get to CleanSpark in terms of operational hash rate. Now, CleanSpark, a pure play miner, Anthony, so you're not going to get the HPC AI exposure, but in terms of a pure play, this is a pretty good looking report card from my perspective. So just shy of 500 Bitcoin, 494 Bitcoin, excellent fleet efficiency, sub 23 joules per terahash. And if you look at the hodl here, Anthony, nearing in on $500 million. So CleanSpark definitely making a statement in terms of a strong pure play miner that's really going after that top position.
Yeah, they tick a lot of boxes. So they've got the hash rate where it needs to be. They're on track to try and get 32 by the end of the year. They've been buying up sites and companies. So they purchased Grid recently. They've now bought a 75 megawatt site in Wyoming. So that's another state they're going to occupy. So they're in a bunch of American states now. So it looks like they're going to get to their 32 exahash. You'd want to you want to hope they bring out an update to say they're not going to achieve it well in advance of that. But I expect them to certainly get close to 32 by the end of the year, because there's a hash rate on for all these miners. And you look at the likes of IREN and Riot are also aiming for the 30 plus exahash by the end of the year. So nothing better than a little bit of competition out there to try and get these miners through their targets. Efficiency, CleanSpark probably has the most efficient fleet at the moment, and that's really because they've grown significantly. You only have to go back about 18 months ago, and they were like, single digit hash rate. I think it was like 6 exahash. And look at where they are now. The 21.2 exahash installed now. Operational power. I've looked at the grid and some of the sites they've just energized. And I've come up with a figure of 555 in terms of megawatts. The efficiencies on their update 22.8. That's about the lowest we've got. They're only selling a small amount of Bitcoin. I think that's probably because it's part of a compensation package for some of the directors. Otherwise, they'd be hodling all the Bitcoin. In terms of Bitcoin mined per exahash, it's 23.3. So it's not a million miles away from Hive. So Hive's at 24.7, Bitfarms at 24.6. But you can see even, and we put CleanSpark as, quite an efficient miner, there's still a bit of a gap there. So Hive and Bitfarms just generally tend to eke out a little bit more. But that hodl size there of nearly 500 million, again, that sets them up quite well. They've been advocates of using the ATM for literally everything. And if you're hodling like they've been hodling the last sort of 6, 7, 8 months, they've been literally using the ATM to pay for all their operational and capital expenditure whilst they've been saving their Bitcoin, because they firmly believe that the Bitcoin price will be accretive and rise in value, and therefore that will just strengthen the balance sheet. But remember, guys, we had back in 2022, we had most of the miners were hodling then, and when the Bitcoin price changed, they started to sell and rush to sell and ended up getting lower prices than expected. But maybe this time is a different time. We've got literally half the miners are selling daily, half of them are on a sort of like a hodl basis. So it's going to be interesting. But they've got a sizable hodl now. Only the likes of Marathon Digital have got over 20,000. You've got Riot over 9,500. You've got Hut over 9,000. Then you've got CleanSpark at just over 7,000 there. So kudos to them for getting that hodl up very, very quickly, literally by hodling 99% of their production month by month.
Yeah, they've been aggressively going after that hodl. Those are the most dangerous words in investing, Anthony. This time will be different, but I do tend to agree with you. We're at a different point in that 4-year cycle, and I do think hodling right now makes sense for many of these companies. Now, Marathon, you just talked about them in relation to their hodl, over 20,000 coins. I'll bring up their earnings here on the company website. Great to see we're still displayed on the corporate website for Marathon, Anthony. We've got our video with Fred up there, but Marathon came out with earnings as well. So 2 of the big hitters, obviously we had Jason Less on yesterday to talk about Riot. Marathon is another company that's really going for broke here in terms of Bitcoin focus, Bitcoin hodl, Bitcoin mining. They are 100% committed to the Bitcoin story here. What were your takeaways from earnings, stock compensation, and the numbers we saw from Marathon for the quarter?
Yeah, I mean, we've already articulated in a number of podcasts before the start of August that, with these results coming out from miners now, it would be unlikely any miner would come out with a net income position for that quarterly period of between April and June 2024. So in terms of that period, Marathon came out with a net loss of nearly $200 million. However, if you take the 6 months of the year, because the reason for the loss is because the price of Bitcoin dropped, and the FVSB rules are going to affect more those miners who've got a hodl. So if you've got a hodl, the price of Bitcoin at the end of Q1 or the end of March 2024 was around about 71,000. And at the end of Q2 or June the 30th, it was around about 62,000. So that 9,000 difference in valuation for every Bitcoin on the balance sheet has to be taken as an unrealized loss. So when you're a company like Marathon, you've got 17, 18,000 Bitcoin, you're going to take a loss, and their loss for that 3 months was $148 million. So not an insignificant amount. So if you look at the net income, 199 million, and then look at the biggest reason for that is the loss on the value of Bitcoin of 148 million, and then you look at the amounts of depreciation and stock compensation. So those three elements are actually non-cash elements. So any gain or loss on valuation is a non-cash. Stock compensation is a dilution of shares if shares are awarded to employees and directors of a company, and depreciation is also a non-cash cost. All very relevant costs, so we don't want to disregard those costs. But from a company, we've talked about this significantly, what you're looking for is to make sure that the income that you receive through mining Bitcoin is sufficient to cover the bills that you're going to pay in cash as a minimum. And so if we look at their position from a minimum, even for the course that just ended, they were cash flow positive. So if you look at the amount of revenues, and then just deduct the cash elements, so the G&A costs for like salaries and the electricity costs for mining, you actually get a free cash flow of just over 50 million. Now, what I've also done is I've looked at the 6-month position, so that takes account of the start of the year, and because we had a good rise in Bitcoin price in the first 3 months and then a drop in the second 3 months, let's look at what the position looks like for the whole 6 months. And actually, it looks a lot better. So if you look at the net income for the first 6 months, 137 million in terms of net income. So that's effectively a profit for the first 6 months, and that's 51 cents per share. If you look at some of the key points that come out of that, and we're going to talk about stock compensation a little bit more when we discuss Riot. Stock compensation for Marathon for the first 6 months was just over $80 million, which is in their account. So from the podcast yesterday, this is the amount that companies, the maximum amount they can sort of go into their pot that could be exercised should they reach every target. If they don't reach every target, it will be significantly less than that, and the money that the funds that are set aside for the elements that they don't reach is actually effectively re-put back through the account. So that money would be credited back. If you look at the gain on Bitcoin from the start of the year, so this is looking at Bitcoin price from the 1st of January, looking at Bitcoin price at the 30th of June, that 6-month period, and Bitcoin, even though it's dropped in the last few months, it exploded overall in that first 6 months. And that gain for Marathon gave them a 340 million unrealized gain in the value of Bitcoin. So we talked about the loss in the last 3 months of 148 million. But actually, if you look at the first 3 months of the year, you were close to nearly 500 million in terms of a gain from the Bitcoin price. So Marathon have given a little bit of that away because the Bitcoin price dropped, but the first 6 months still a really good position. Free cash flow over the first 6 months. So how do they do balancing all their revenues coming in and cash costs going out? Just under $84 million. So cash flow positive. And free cash flow as a percentage of their enterprise value was 5%. So again, another metric to consider there. But overall, in terms of the income statement, as to be expected, because it's all based on the price of Bitcoin. If that they haven't got any control of the price of Bitcoin, they have got control over many of those other costs in there. So they've certainly got control of how much they pay the staff, how much they're giving out in stock compensation, and so they do control an element of those costs there. But the Bitcoin price is one of them that they do not control. If we move across to the balance sheet, we can see that Marathon Digital's balance sheet is getting stronger and stronger. You know, I mean, the company earlier today had a market capitalization, even though the price has dropped significantly over the last couple of weeks. It was at $27 probably 2 weeks ago, hovering around $17 today. So that was a significant drop over that period. Still got a market capitalization of over $5 billion, nearly $5.2 billion. Debt on the balance sheet is just over 365 million. They've got cash and cash equivalents, and this is at the end of June. So usually in their update for July, when that comes out in the next few days, they'll highlight what they've got as at the moment. But if you look at the accounts for the end of June, they have 256 million in terms of cash. And if we look at their HODL, now we don't know exactly what their HODL is, but their last update said in excess of 20,000. So I've used that figure of 20,000, and that gives them close to 1.3 billion. So HODL plus cash gives them a treasury of over $1.5 billion. You know, that's a significant war chest there. If they need to use that to, you know, make any opportunistic purchases over the next 6 months, as you know, more and more miners start feeling the pain. And we talked about the difficulty going up. It means you've got less revenues coming through. Your costs are going to be effectively staying the same. So you're just not going to get enough revenues unless the Bitcoin price rallies. And maybe those extra machines coming onto the grid was in anticipation of that. But Marathon's balance sheet is strong. Debt to equity ratio, it's only literally 9 cents of every dollar is debt. And another key metric is looking at what their enterprise value over their current hash rate and future hash rate. So if you look at Marathon's current hash rate, which is 31.5, and look at that, look at the value of that hash rate, and this is the key indicator now, because we're looking at merger and acquisitions of some of these miners. How much is the floor rate for hash rate? And we've heard that floor rate of around about 100 million. Well, if you look at Marathon's current hash rate, it's valued at 127 million or close to that. And if you think that some of their valuation is because they're going to 50 exahash by the end of the year, at today's price, that would value the hash rate at the end of the year at $80 million per exahash. So that's quite close to some of the sort of like metrics that some of these companies are looking at in terms of, when you're going into M&A or you're acquiring companies. It gives you an understanding of how much is a reasonable price to pay.
Yeah, great analysis there, Anthony. And it's interesting that the midpoint between the 80 and the 120 is right around that 100 million. So I guess you'd estimate maybe half of that additional hash rate is priced in. Very interesting to go through the details here. Now, we wanted to follow up on yesterday's video. A ton of comments, which we greatly appreciate in relation to Riot, specifically in relation to stock compensation. Now, we all have our opinions on this. Obviously, you vote with your wallet, right? Whether or not you want to be invested in these companies. But interestingly enough, Anthony, similar to the questions we actually sourced from the audience, these pay packages and compensation packages are voted on by shareholders. So ultimately, you guys, it's not the CEOs that pick their own pay and bonuses, it's the shareholders. So I wanted you to just expand on that a little bit, Anthony. I do, in a general sense, agree that the comp packages in this sector are quite rich, considering the size of these companies. However, I do still see value in investing in these companies. And I think over the long run, based on my personal bullish thesis for Bitcoin, this won't be a material cost moving forward. But I'm curious to get your thoughts on this and if this impacts your investment decisions here.
So if we look at all companies in the sector and all the companies that we look at from an analysis point of view, I would say that the vast majority of pay packages, which include stock compensation, are significantly higher than I would normally expect. These CEOs get paid really well, and all their pay packages are very much transparent. People will see occasionally on Twitter, someone will put a post out there to say, how much a certain CEO or a director's earning. It's because that information is available. It's not hidden. They have to, as director of a company, the salaries have to be transparent, the bonuses have to be transparent, the stock compensation has to be transparent. Now, generally, these companies will use specialist companies to go out there and review what's in the market, and so to then make sure that they're falling in line. But the issue you've got is if all the miners are sort of like, having, reasonably good salary packages and bonus packages, and the stock compensation, effectively it's like a hamster wheel continuing to go round. You're quite right. One key thing to remember is, if a shareholder believes that the stock compensation, and I've already articulated, and you said as well, we believe these are high for an industry that's less than 7 years old. So the oldest miner out there is actually Hive Digital, and actually Hive probably are one of the ones that don't pay themselves excessively. So in terms of G&A costs, we could do some analysis on G&A and look at that as a percentage of revenues, and Hive would be one of the lowest percentages of all the mining companies. So the oldest miner, and they'll be going to be 7 years old in September, so we'll hopefully get invited to their party for that day. But that's the oldest miner. We're looking at a very young industry. I mean, CleanSpark have not been going much more than 3.5 years, and they're the sort of like, at the moment, they're the second biggest miner. So it's a very a very infantile industry, and yet we're starting to see some rewards that you'd expect from the CEOs managing sort of Apple, Microsoft, and Nvidia, or something like that. Some of these companies that are worth trillions of dollars. These mining companies aren't worth trillions of dollars. But one thing is key: the shareholders have to vote in these packages. So these will go on a members vote each year, and the shareholders will vote in. And actually, with the exception of TeraWulf, which have a significant number of shares held within the company, so it would be probably quite difficult if TeraWulf started paying themselves, significant amounts of stock compensation. We'll find out in their update in the next week or so. That's one company that shareholders might have a challenge to overturn that, because I think they hold something like 40% of the company. So it wouldn't take them much to get some of their proposals through. So you'll normally find, when you're voting for directors to be reappointed, so on an annual basis, there'll be directors coming up for re-election. You'll also see executive compensation and salary packages need to be approved as well. And, institutional shareholders who hold, bigger amounts than obviously the retail shareholders, they get to vote. And, at the end of the day, if people think, why aren't there more institutional investors in these companies, then probably it is because some of them are paying themselves quite handsomely. However, we had Jason on last night, and we put the question to Jason about stock compensation, tried to, understand and explain the process. And he explained it. The question was asked. If you watched the podcast, it was asked last night. We've got marathon results came out an hour after that, and people were going absolute berserk over the Riot's compensation of 64 million in the first 6 months of the years. That's been accounted for, so not issued 64 million. They have to reach every target for that to be fulfilled, and they're going to have to really achieve all their targets, which for them it's having higher than average share price increases on the Russell 3000. So they have to do better than their peers on the Russell 3000 for execs to get, and staff, because Jason, one thing you got to remember is Riot have got over 500 staff. Marathon have got something like 60 or 70 staff, and they've issued themselves 80 million in the first 6 months. So, when we're talking about stock compensation, it's clear that we need to talk about every miner, and we'll see the likes of CleanSpark come out next week, and a lot of other miners this month, and we'll see those levels of detail there. And actually, I'll probably put an article together in August highlighting, the stock compensation that's coming out there. and looking at maybe some of the packages that they're already receiving, so that people have an education as to what what they're getting paid. But at the end of the day, a lot of it's down to you guys out there who own the shares. You've got the opportunity to vote on this. One thing I will say about Riot is, we know the last 18 months, 2 years has been hard for everybody who's been a shareholder of Riot in terms of production, in terms of sometimes not always the transparency that we would like. But I'd like to hope that since we've started doing the platform and we've had all these CEOs on the platform, we are starting to ask more questions and start to challenge more. And we challenged Jason a few months ago regards to hash rate at the Rockdale facility, and he came clean and he said, look, we've got 4 exahash of miners that aren't working as efficiently as they should, and we have a plan to replace them. We've got an order with MicroBT. It's going to happen. They're going to start getting replaced July, August. So, he came out and said that. Yesterday we talked through all these other costs that were hurting their financial position. So they have hosting contracts, and they've also had the costs of legal costs going through these discussions with Bitfarms as well to try and purchase those. Me and you, Bryce, we went down to Corsicana a month ago. We saw that site there. We were mesmerized by looking at that site, looking at the potential. And I've been saying to people, this is my own view this year is, I hope this is the 2024, the turnaround for Riot, and looking at that site and the speed that they're building those facilities, and they will get to that 30. Initially 31.5 exahash. That's now been increased to closer to 37 exahash, having purchased the likes of Block in the last few weeks, and having met the Block team in Nashville, who were, all their senior team were there, and their senior team were really happy to be part of the Riot family. So I know there's a lot of questions out there about, why would Riot look to purchase other miners? End of the day, Riot want to grow, and if if I'm going to buy something, I want to buy the best. I don't want to buy something that's going to, that's probably straddled with debt and is a poor performer. We've just articulated for 10 minutes, Bitfarms and Hive are the 2 best performing miners in terms of operational performance. Why wouldn't companies be interested in buying them? Now, it's down to the shareholders at the end of the day whether those companies get acquired. So the shareholders have a vote, and I know the retail shareholders don't want Riot to purchase Bitfarms at the moment. From what I've heard through the comments, through meeting a lot of people in Nashville, through just general discussions, through DMs, and I appreciate that. I've got shares in both companies, and actually, I can see the merits of both. I want Bitfarms to get to 21 exahash by the end of the year. I want them to achieve it. I want Riot to achieve their hash rate by the end of the year. I really think Riot, and I've said this many times, Riot will achieve their hash rate by the end of the year. When you go down to a facility, you get an understanding of where they are. And as I say, the people that went down to that visit there were pretty much blown away by what they saw and the potential to get to where they need to do. But they really do need to this year. They can't have any hiccups. We've had the problems with the weather conditions, which took out 2 facilities at Rockdale, the poor performing miners, which accounted for 4 exahash. I mean, 4 exahash isn't much more than what Hive Digital are as a company. So, you've lost a mining company in terms of machines that you've ordered through Bitmain that weren't operating at the right level. That's it. Apart from being acceptable, understandable, sorry, retail investors want to see a return on their investment. And I'm like, everyone else. People bought shares in 2022 or 2023. Share price may have been well over $20. And at the moment, it's hovering around $9. So again, that question was asked last night to Jason. What's your answer to the retail shareholders who bought shares at a significantly higher price and all this dilution to grow? When are they going to see a return on their share price? And so, we're not trying to sort of ask Jason his favorite color or what he had for breakfast. We're trying to ask the questions that some of you guys put forward, and but we've got to do it in a professional manner. We can't just come in there and put some of the comments that went through YouTube to Jason. And actually, I just wonder if some of those people that put those comments actually watched the video, or we were just looking at a comment. Somebody put down, oh, it looks like they didn't mention stock compensation. We did mention stock compensation. We had a whole section on stock compensation on the
Well,
video.
and at the end of the day, Anthony, the beauty of this is these are publicly available numbers, right? You can see
Yeah.
exactly what people are paid and compensated on. You can run that as a percentage of revenue, and if you want to use that as one of your guiding metrics in terms of your investment thesis, you're more
I've
than
used it
welcome to
before,
do so.
Bryce. I've used that metric before on comparisons.
Yeah.
Again, it's one of about 20 metrics, but it's an important one because at the end of the day, this is a new industry, and we know there's been a struggle to get, to raise, to raise debt, which is a challenge. The interest rates are too high at the moment. So, when you're starting off a business, you want to try and keep costs as low as possible. And I appreciate you need to have good people in place, but what I've seen from some of the Form 4s this year that have gone through, in the Form 4s, if you go to one of these mining sites and look at the SEC documents, go and look at the Form 4s. That tells you the shares that have been awarded to any of the senior directors in each of the companies, and see how many shares they hold. It also tells you if they've been buying their own shares or whether they're just getting shares issued as part of like an RSU package. And these will be done for performance and certain criteria in terms of the company achieving certain targets. So their own performance and the company's performance. They get long-term incentives to stay at the company. Everything's aligned with the company, but there is a question as to sort of like, at what level should those compensation packages be? And, if you've got a independent company coming in to assess stock compensation, how independent is that company if they're getting paid to provide the analysis? That's the issue.
It's a
And we
fair
know all
question.
about that because, we've been criticised for that as well. So, but
No, and not
all
to beat a dead horse here, you guys, but this information is available and it's publicly voted on. So at the end of the day, it's up to retail and institutional investors to determine these numbers. So we wanted to shed some light on that, especially if you're unaware where to find this information or kind of how it works on the back end. Anthony, appreciate the insight today. Great tables, great analysis. We'll be back next week, you guys. Again, we've got a ton of earnings interviews coming up. Anthony, I'll kick it back to you for any closing thoughts, but we really appreciate the time.
Yeah. So, closing thoughts, just looking at the two miners that have released their results. So they're the first two. I mean, a year ago, these were the biggest two miners in the space. CleanSpark has since sort of like, in terms of market capitalization, they've gone past Riot, but in terms of hash rate, actually Riot have a higher installed hash rate than CleanSpark. Their results come out. Their monthly results will come out and show they're at least 22. So that's higher than what CleanSpark is showing. But you need to have 22 operating. So we'll see what that figure looks like. In terms of the Riot position, I'll just very quickly tell you that over the 6 months they had free cash flow in terms of looking at the whole of the 6 months. So they're able to operate with free cash flow. If you look at the last 3 months, because of certain things they've been paying for, they had a negative free cash flow of about 4.5 million. So they spent 4.5 million cash terms more than they'd brought in terms of Bitcoin mining. So, but in terms of balance sheets, I think Riot have as strong, if not stronger, balance sheet than Marathon. And we've talked through Marathon's balance sheet as being strong. Riot's has always been a strong balance sheet. They maintain that all the way through. And that puts them in a really good space to do things quickly. And we've just seen that. They've just spent 92.5 million purchasing block. And if that comes off as they expect, there are some incentives for block to maintain certain criteria. There's an extra payment to the block team, who are now part of the Riot family. So they all moved across. And so, people should be thinking about, the size of this company is just going to get bigger and bigger. And, I can see some of the benefits, from the Bitfarms, but I can also see the benefits of Bitfarms getting on with themselves and building their company themselves there. But if you listen to Fred Thiel, who said 18 months ago, in 5 years' time, you're only going to about 4 or 5 miners out there. The rest of them will have gone, or they've been been acquired, and you're only going to have like 4 or 5 really big miners in the space because of the nature of the business. It's, you know, you've got to have the cheapest power, you've got to have the most efficient fleet, and it costs money to do it. And therefore, it wipes out half the miners straight away. So you're into sort of like five or six miners anyway. So it's who's going to survive, and maybe we do a podcast on that in the near future. Who's going to survive out the miners? Because it is going to be challenging going through now in the next 12 to 18 months as we go through this cycle.
Yeah, not for the faint of heart from an investment standpoint or from an operational standpoint. Bitcoin hovering just north of 63,300 right now. So hoping you get a big rally over the weekend here, Anthony. You guys, if you're still watching the video, smash the like button. Big help to ourselves and the channel. If you're not subscribed, feel free to join. We're north of 45,000 subscribers. Let us know in the comment section below. What do you think about the stock-based compensation? Your thoughts on July production and the numbers we've seen so far for Q2. Thanks for your time, Anthony. Have a great day. We'll see you guys Monday.